2023 was a year of unprecedented twists in trucking. Let's unravel this epic journey and see how it reshaped our roads and your wallets. Now come with me. I have a unique 20-year journey across all facets of trucking. I've witnessed the industry's evolution firsthand. From freight brokering to fleet management, I've navigated these waters and I'm really here to share the insights with you. Now let's dive into an oil and fuel and really the market dynamics. So picture this. In 2023, oil prices danced to an unpredictable global rhythm and they swung between, let's say, lows of 75 and highs of 95 per barrel. And for us in the trucking industry, this is really just meant to adapting to a never-ending series of fuel cost fluctuations. And it's cyclical in nature, but every spike and dip in the fuel prices had us really recalibrating our budgets and strategizing and testing our resilience. It's curious how these roller coaster fuel costs, they might influence routes in 2024. That's the question that we think, that's the question that you should be thinking, so stay tuned. In terms of inflation and consumer spending, if you imagine the impact when inflation soared up to a 40-year high with that CPI peaking at 7.9%, this led to a tangible 5% drop in consumer spending, and retail spending. Less spending meant a lighter load on our trucks, meant trucks not being filled to capacity. So this shift, it translated to fewer goods to haul directly, which squeezed operations and income. In terms of US oil production and the global supply dynamics, in a bold move, US oil production surged to nearly 12 million barrels per day, aiming to counter global supply instability. Yet the global oil markets waves still rocked our boats. Even with this domestic boost, the global market's whims kept fuel prices on a tightrope. And when you think about transportation demand and freight market trends, these are huge variables. So against this backdrop, freight volume dipped around 2% from the previous year. The digital surge in e-commerce, it was a silver lining, but it really couldn't completely offset any of the overall decline. So this scenario, it demanded a clever adjustment in our logistical strategy and our approach. And what this meant was to be agile. It meant optimizing every route and every load and keeping our wheels moving. If your wheels aren't moving, you're not making any money. And that's true for any fleet, private fleet, for-hire fleet. That's really just across the board. So coming up, we're gonna explore the lifeblood of our industry, and that's of course the truck drivers. Now, when we think about driver employment and capacity trends, 2023, there was a 3% increase in driver employment, which is great, but it infuses new energy into our roads, but it also aligns this fresh wave of drivers with the ebb and flow of work and a strategic balancing act. So when you think with more drivers vying for work, the competition for loads, it's intensified, it's increased, and challenging both rookie and veterans alike. These are variables that they were not used to. So when you look at the outlook for diesel prices and the capacity forecast, in terms of diesel prices and constant companion, you averaged around $3.50 per gallon, but spiked alarmingly in some regions. While a smoother road may lie ahead, the path remains unshrouded in uncertainty. Keeping a vigilant eye on diesel prices, again, extremely important, and we do this every single year, but it becomes even more crucial part of our daily navigation as that inflationary price drives fuel to become a higher percentage of your cost. Now, when we focus on spot and contractual rates in the freight market, this game of spot versus contract rates, 2023 was really like playing chess with, let's say, a 3D board. The dynamic terrain just meant constantly evolving tactics for brokers and fleet owners and owner-operators alike. So adapting to these rate changes, it wasn't just about survival, but about finding that path to profitability and the best path to profitability. So let's delve into a gear that kept us moving, which is the equipment. This is the silver lining. So if you look at 2023 underscored the near top-notch equipment management, and that's in terms of making smart investments in fleet maintenance. The cost of all this equipment really put a magnifying glass on it, and that's just not maintenance, that's upgrades. And it was not just a choice, but it was a necessity. So this was our secret to maintaining an edge in a competitive landscape, and should be yours as well. In terms of reliable equipment, that's the key word here. It's the unsung hero. So all of the pre-tripping that your drivers do, all the minimizing of downtime and the maximizing of the presence on the road and maximizing your wheels moving more specifically. So in terms of economic challenges and triumphs, I know that we all rode through these storms, learning and adapting and emerging much stronger. But armed with these insights, we're set to navigate the uncertainties of 2024 with some confidence. So if you've been following our journey, please join with us in 2024. Please hit that like button, hit that subscribe button for more insights, and please share your own 2023 trucking tales in the comments, and let's dive into 2024 together, stronger than ever.